All right, guys. So what I'm going to try to do is cover more markets. So, and go into some intricacies like you'll see just by watching the video the points that I'm trying to get across, through examples, after example, day by day, all of that. All right, so left-hand side is your higher time frame, like right-hand side is your lower time frame or the lower brick size. It's the same concept. All right, you could use hourly, daily, a higher time frame and then a lower time frame, like an hourly 5 minute or daily and hourly, whatever. All right. So what I want to do in going forward is review turning points using the left-hand side. The chart on the left-hand side is your higher time frame or higher brick size, and the right-hand side chart as a lower time frame. Using the lower time frame to enter on higher time frame trends. Okay. So so all you have to do if you want to learn this is just watch and just try it on try yourself on whichever chart you want, on whichever time frames you want. The key is that I'll be focusing you on turning points using two charts, a higher time frame and a lower time frame. All right, so let's start with the higher time frame here. We'll start at the top. And you know what's really fucked up? I was getting ready to short this. I had an order right here and never retested. You know? Anyway, I'll go into my logic and all that. So uh, the the market is rallying, and this is its last up rally here. All right. Now at this turning point, we want to analyze it to see how it turned, why it turned, how it turned, all of that. All right. So I'm taking a look at that particular turning point, and what are its key characteristics? What does it have, and what behaviors does it have, and what behaviors that it doesn't have? What immediately got me interested is right off the bat, I know, everybody knows the smart money creates the lows and the highs, or they know what the lows and the highs are, and they jump in. And when they jump in, their footprint is detected via volume. All right, the volume is the smart money's footprint. When they say follow follow footprint of smart money, the footprint is the volume. All right, so anyway, okay, so we see this leg up, and we see on the lower time frame on the right hand side that the market is going higher. And right at that turning point, what do you have? Selling the high, selling the high. These two bricks, the biggest down volume in 100 bricks, followed by another even bigger down volume in another 100 bricks, and it has follow through. Okay, so we see that we have volume off the top. No questions about it. We got volume off the top. And the second thing we see is that it is part of a change of behavior. All right, so we have this change of behavior. We also have a low volume pullback. All right, so we'll just put that as lack of demand. So we have that low volume pullback, lack of demand, and we have that change of behavior. So those are the two things. Now there are four key things, but those four key things are supported by other behaviors. The four key things that you want to see that are, indicate climactic, that indicate turning point. You have your climax, you have your change of behavior, you have your breakout, you have your lack of demand or supply, depending if it's bullish or bearish, and then you have a confirmation, lower high, lower low. This is my schematic and what I understand from the materials that I have, my experiences. So these are the 5 things, not 4, 5 things. So first we'll go over the 5 things, and then the supplementary things that ensure, that you see what you really see, and that it's not just BS. So understand that, before I even continue, let me just take a step back. Okay, the reason why I need to start this right is that when you have an uptrend, right, a lot of people see this and they're like, oh, or something a little less shallower. Let me draw this 1, 2, 3. This, and they think this is a sign of weakness, right? Or they might see, and they think this is a sign of strength, right? Now, what it comes down, sign of strength. So what it comes down to is this is selling and that's buying. All right. This sign of weakness is selling and the other one's buying. But people buy and sell for different reasons. So, what are the potential reasons? One is it's a spring. It's actually a spring. Take out this low, basically a stop run or liquidity grab to go higher. Right? So we'll just put up thrust or spring. It's not a sign of weakness. It's not a sign of weakness. It's actually a spring, and it wants to go higher. So they're targeting these lows because either there were no breakout buyers or because they just want to grab the orders to go higher and just spring it. All right. So that's scenario one, where you see selling. All right. Scenario two, maybe it's some type of preliminary supply. So you could have preliminary supply that goes here, goes down, and it's not a stance. It's not distribution. It's none of that. It's just, I mean, imagine this. If you have like multiple positions, you're scaling out. What makes you think that the smart money also doesn't scale out? Right? They could be scaling out as well. So this is some type of preliminary selling. Prelim, selling or buying. Right? So scenario one is it's a shakeout. Scenario two is some type of preliminary selling. And scenario, actually there's like 3 or 4. All right. The last one is the one I want to talk about. That is that this is distribution. Meaning this is part of distribution, getting ready to break the market. Meaning getting ready to go lower. All right. So that's the one you want. There are other reasons for selling, and not every big selling wave is a sign of weakness. And if you go short, oh boy, on every strong selling wave, you're in deep trouble because most of them will not be sign of weakness. All right, so you have to be able to distinguish distribution as well as accumulation, right? In their sign of weakness and sign of strength from just strong selling waves, right? Yeah, because many times, and I've seen plenty of times, you have a wave like this and it just breaks. So why wasn't this a sign of strength? Right? 12. It's a good question. So you have to be able to distinguish why the selling and the buying, whether it's a sign of weakness and all of this and that. All right, so there are ways to do that, and you just have to backtest really to identify as many examples. So as I review these turning points, because we know these turning points are what? Distribution and accumulation, on a minor scale on a lower time frame. So we want to see that accumulation and distribution so you understand the patterns and the behaviors within those turning points that are that are helping you confirm that this is indeed accumulation and or distribution and not some other shit. Okay, so with that background, let's start reviewing these markets. So we see that, yeah, it's going up, 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 and we see a strong selling wave. You see a selling wave. Is this a sign of weakness? That's the question. Is this a sign of weakness, or is this a spring? If I didn't show you the right-hand side and just showed you this, it's a slight penetration below and it's ready to reverse. So what is this? Is this a sign of weakness or a spring? Is this some type of preliminary selling? Is this anything other than a sign of weakness, or is this a sign of weakness, and how do you know? Right. So now we'll be taking a look at those refinements to better understand what makes it highly probable a sign of weakness. And this thing is not covered anywhere. Like folks, it's these refinements are not covered on YouTube or even in all those mentoring or tutoring that stuff that's offered on YouTube. All right. So what do you see and what elements do you see that stick out? Well, we see right at the high, look at the volumes. They're absurd. They're absurd amount of volume right at the high. So what is that telling you? Well, it's telling you that this is volume at the top. Volume at the top. Smart money makes highs and lows. That is what they do. And you clearly see that selling at the top. So we have that. Okay. What else do you see? The first pullback after it is quite weak. All right. So we'll just take a look at the core things, and I ordered them in a way that it's very, maybe we can do one, step by step. So first of all, is there a climax? The answer is no. There's no climax here. There's no climax in terms of a climactic wave. There is, even the volume at the top could be considered, some type of climactic action, but that's a different story. The idea here is that, is there a climax? No. That alone may make you pass the trade. You might say, forget this. I'm not taking the trade. And you have a valid reason to pass the trade because there's no climactic move. So even though it turned out, yes, it was a sign of weakness, that schematic that says climax, secondary test, automatic rally, all that stuff. You see, there's no climactic wave here. All right. Second, is there a COB? A COB or a sign of weakness? The answer is there is a COB, but you have to examine it. Is there a COB? I say yes, and not just in hindsight, but because there's volume at the top, and the logic is smart money creates highs and lows, and when they're in distribution and they do that sign of weakness, in majority of the cases, you will see a volume at the top or volume at the bottom. All right, so I say yes, there is a COB. Okay, after that, do you have a breakout? A breakout is when it takes out the low, there's a low on increasing volume, and it should be significant. All right, because this type of move is telling you that that it's broken the trend. Yeah, so I mean, the way it was described by Wyckoff, he called it the backbreaker. Right, and probably on a bar chart it looks really big and all that. So anyway, so here is that breakout, and the rule with the breakout, it has to have follow through, meaning at least one break, but typically you want even more. You want at least 2 breaks. But I mean, if it's a bare minimum, it should be 1. And you see it takes out this low on increasing volume from 3 to 10. 10, relatively speaking, is high also. So right here, you have about 1,000 contracts, and they break this low and have another 9, so 1,900 contracts right here. So you would say, yes, it has a breakout. So why I'm saying this, a COB must, in my opinion, have a breakout in it. I've seen too many examples where you have a selling wave without a breakout and the thing totally fails. Or you have a buying wave, change of behavior, sign of strength, whatever. It doesn't have a breakout. If it doesn't have a breakout, don't even think about it. All right. I've seen it too many times to I know better. So now after going through all those experiences, that sign of weakness and sign of strength really should have a breakout. All right. Otherwise, you know, it just springs or does something. It's like a light test or touch or whatever. So here you go. There's your breakout. You can see the volume increase from 3 to 10, and it has follow through. All right, so now you have a breakout. Okay, what about the third step? The third step is the lack of demand. I'm going to change this terminology here. But basically, the idea is either lack of demand or lack of supply. Yes, you have it, no question. Why? Because when you compare the volume to the up volume to the down volume, you see the down volume is 56 and the up volume is 5. That's like 1/11th of the volume. 1/11th. Clearly, this is a lack of um, lack of demand. It's lower than 1, 2, 3, 4, all these waves. It's very low. Relatively speaking, it's 1/11th of the wave down. There's one other thing I'm going to mention about the COB, and that is that this is the biggest selling wave in at least, I think, 49 waves. All right, at least, because you see red, 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 red. So when we take a look at this now, you see that the COB is strengthened. What is it strengthened by? It is strengthened by volume at the top, which is either in the COB or right before it. It should be around the COB, like it uh, should be around there, like right on the left-hand side before the COB, or in it. In this case, it's in the COB. So we have volume at the top. What else do we have? Second, we have a breakout. Third, the entire wave has massive selling. All right, and more than many, many waves. Fourth, we also have a low volume pullback, which in this case is actually the lack of demand. 5, confirmation, but this confirmation is comes later on. You know, it's like makes that lower low, but it just keeps on going. So there's your confirmation. So those 4 elements are there. Okay, now what are the elements that help strengthen the case of this? Well, first is volume at the top. Yes, it has it. Does it have a hinge? On the left-hand side, there is no hinge. Does it have a shortening of the thrust? No. Does it have cause? No. Does it take out a low or a climactic low? There's no climax, okay? So this is reality. This is not a schematic. All right, in reality, you will not have, the schematic is a model. You will not have all the behaviors there. You will not have phase A, B, C, and D. This is a fictitious idea someone created. Actually, the thing is, it's a model. Model typically has everything, you know, because it's a model. You have all the details and all of that in it. But in reality, you will not have an extended range, an extended phase with phase A, B, C, D, climax, automatic rally, secondary test, let's go to B, and, you know, all this and that, and a spring, and then a more important sinus strength. All of that is a model. Do not sequence it and apply the entire model on any chart, because it just won't be there. In this case, do you see anything that's very extended in terms of a shortening of thrust? Do you see even a climax? There's no climax. There's no, extended range with phase A, B, C, D, right? So what is there you have to take and judge, aha, yes, we are turning, okay? So what is there is only a change of behavior, but it is a very clear change of behavior, even though a climax is not there. What is there is this change of behavior with the breakout with volume at the top, followed by a low volume pullback. And that set up the entire move down that we had today. That's the turn that set up everything. All right, so I've covered, maybe I'll cover this one as well. If it's clear, let me see. So I'll cover that pullback, that upthrust here, and see what were the key behaviors. Market rallied, went up, pulled back. Nothing. Nothing. It's non-evident. The distribution is non-evident. All it does is upthrust with all greens, but you can see that if you put the two together, it's not bullish. If you just look at the right-hand side, it has big range and big volume, and it looks bullish, especially because it took out a high. But taking out a high on a lower time frame could only be an upthrust on a higher time frame in a downtrend. And here you have the biggest volume and the biggest price action and a rally and a breakout and all these trend lines being taken out. All of that, and it looks very bullish. But if you take a look on the left-hand side, on a higher time frame, you'll notice it's nothing but an upthrust into where? Into this breakout break right here. That's a breakout break, basically a breakout right here. And it's very bearish to be in that area. Like, that's not the area you want to be in. Anyway, so it's unclear. Any element of distribution is unclear. Here again. This might actually set up a trade. Anyway, all right, let's move on to the next market. All right, so now the market that we're going to take a look at is crude, right at that top. Okay. All right, so in taking a look at this market, we see that on the left-hand side, there was a rally down and it's consolidating, right? 1, 2, 3. What we notice about the rally down is that it has a lot of volume. It has 825 volume. All right, and the pullback has only 227. All right, so it has, I don't know, like 1/3 of the volume. And then it's just, these are just 2s and this is an 8. All right, so right here is what we want to take a look at. Why do we want to take a look at that? First of all, we want to mark this because this is from the where the selling came from. That's why we're taking a look at this. We are taking a look at this level because on the left-hand side chart, we see that heavy selling 33, which is the biggest volume in all the bricks, is being tested. Okay? As it's being tested, let's examine. All right? So you see a market going up. You do notice that there is some volume here, right? But I wouldn't call it excessive or very high or anything like that. So does it have a climax? Answer, I don't think so. Actually might. It's bigger than 1, 2, 3, 4, 5, 6. Actually bigger than 14 waves. So yes, it's not very apparent, but this is the most amount of volume in 14 waves. So I'd say, yes, possibly it has a climax depending on other indications. All right. Second, what else does it have? Volume at the top. All right. So that right here is really important. But before we go there, we want to take a look at to see if it has other key behaviors. So it has climax. I'll go through the green buttons and then the red buttons. Does it have climax? Potentially, yes. Why? Volumes greater than the last 14 waves. That could be a potential climax. It could also just be a rally. We will know later on as the price volume behavior confirms. Does it have a COB? Yes. Look at red, 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 red. Right? So that's the biggest selling volume in 49 waves. It's the biggest down wave in 14 waves. The price volume is confirming selling. Now, what else? Does it have a breakout? Eureka! It has a breakout right there. Is it this one or this one? Whatever. So it increases here from 3 to 6, doubling. So that can be construed as a breakout. But this 13 here also overlaps. So that could also be construed as a breakout. So in either case, the answer is yes, with the biggest volume in 11 bricks and the prior one having the biggest volume in 6 bricks. That's a breakout. So in this we have volume at the top right here, followed by an upthrust or shortening of the thrust, followed by a selling wave. And that selling wave, because it has those characteristics and breaks multiple lows, is a change of behavior, right? Now, why am I saying it's a change of behavior and not just the preliminary selling and all that? The price volume behavior is too large. 49, at least 49 waves, and with the volume at the bottom or top, plus the breakout, making this change of behavior a change of behavior. Now, there's additional confirmations. What is the pullback on this? The pullback on this is 15. All right. And the second pullback on it is 16. What was the selling? It's almost 40. So say 40 to 15 is almost 2.5, 15, 30, 40, like 37.5. So this is more than 2.5 times the selling than this is the buying. Okay? So you can say, relatively speaking, we have confirmed that this is a change of behavior and this is a low volume pullback. And so is that, because the selling is 2.5 times greater, more than 2.5 times greater. Okay? And look what happens. So in examining this, we have volume at the top, and we have a breakout, and we have a strong selling wave, and we have a low volume pullback. First pullback is low volume, making this very likely a change of behavior. We also have climactic action, and this eventually you have confirmation. But that's the problem, with confirmation. When you get confirmation, the chances for another pullback is very unlikely. This is a problem. You cannot, you'll miss many trades if you're unable to clearly identify a change of behavior and get in before everybody else does right here, because everyone else will wait for confirmation. It'll make the lower low, and then it'll never pull back because it's done pulling back after the retracements, after 50% or whatever. 68%. And then when it makes that lower low, it's not wanting to go back into areas that's already tested. Now, sometimes it might, but it's questionable. All right, now let's move on to maybe another. What the fuck? You see, this volume is too little for me to figure out. Like zeros and ones, I just can't do it here. All right, let's move on to the next market. All right, next market we'll cover is gold, and what I want to do is I'll take a look at this test right here. All right, because the idea is to play the bounce right back. All right. Actually, this is also bouncing. Anyway, I'll take a look at that later. How is it? All right there. All right. Okay. So we are examining the test. The market comes back to test. As it's coming back to test, and gold is a little bit challenging. So just see. All right. All right. So we see a market that's going down, 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 down. So what are the volumes here saying? 13, 14. Do you have a climax? The answer is no. I don't got a climax. I don't see it. I don't think there's it's just not unclear. There's no climactic action. At least I can see. I can't really see it. All right. After that, you have this buying wave. This buying wave is the biggest buying wave in 19 waves. Shit. So let's examine and see what are the characteristics. First of all, do we have a climax? Answer is no. Do we have a COB? We have a potential COB or sign of strength. Is there a breakout in it? Yes, there is. It's right here. The 5 is a breakout, and over here you have a 3. That 3 is a breakout. You see the volume is the biggest in 2, which is not impressive. This is the biggest volume in 14 bricks right here. So this must be the breakout. So that is your breakout. So your change of behavior has a breakout. So we're testing, you have your change of behavior, it has a breakout. Is there any volume at the bottom? You know, for some reason, this could be it right here, but I'm not really sure. It's a little tricky because I want to see more. I want to see, like, this is the biggest volume in about 15 bricks, and it is coming from the bottom, and it does have follow through, and there is a spring, right? So no question about that. But I don't want to just, it's possible that this is it. It's possible. All right. It is possible. And you have a breakout. And okay, so after all of that, what else do you notice? You have a pullback. What is the pullback on? 3. 1/3 the volume, meaning the 900 contracts up, 300 contracts, I think 300, or is it 3,000? No, it's 900 and 300. So 900 up and 300 down, followed by confirmation. And in this case, you get lucky because 1, 2, 3, 4. 1 second. Yeah, it gives you enough of a test. Gives you enough of a test to enter. But yeah, you could see. So how? So the original question is, how do you know this is not just a bullshit buying wave, and this is a sign of strength? You know that this is a sign of strength because it does, and this is where judgment is important, folks. It does have a volume off the bottom. It does have the volume off the bottom, but I'd like to see more volume. Like it is the biggest in 15 bricks. If it was biggest in 50 bricks, that would be more, or at least 30 bricks, but sometimes it's not that clear. And that's why mechanical systems don't work, by the way, because there's just too much variation and judgment is constantly weighing the bullish and bearish factors. Second, do you have a breakout? Yes, you do. You have a breakout. All right. Do you have a low volume pullback? Yes, you do. Do you have confirmation? Yes, you do. Trend has changed. Higher high, higher low, higher high. Done. And in this case, 2, 3, 4, you get the test and you get a very nice trade. Okay. So I'm going to stop right here. What are some of the key things that, if you've learned anything, is what are the key things that distinguish a buying or selling wave from a true sign of strength or sign of weakness, also known as a change of behavior? One, volume at the top or bottom. Two, a breakout. All right. That is going to strengthen the case for it. Now, as we go forward, I'll be incorporating other behaviors and other examples over and over again, and you'll see how it all comes together. All right. Thank you all. Have a good night. Bye.